Hello, everyone. It's been a little while, but I am back from a long summer vacation. Excited to be getting back into the groove here. This summer spent with family, getting as much time in with my kids before they head back to school, which starts next week. I'm sure a lot of you are in the same boat. But I'm excited to just, get back into a routine, be here with all of you. And we have a brand new Ask a Trader today. And let me just make sure that the chat is set up for everyone so that if you have questions, you can go ahead and throw those in here. Tickers you'd like me to look at, just go ahead and drop them in the chat and I will be more than happy to take a look at that for you. And so what we're going to do here is just today's Fed minutes, FOMC minutes from the July meeting. And it's a very dovish tone, which I think a lot of people did expect. So we'll just take a look at that to get started here. And give me 1 second. Let me share this and bring this over. Here we go. So everybody should be able to see this. So it just gives a summary there. And let's see here. Let me show you just some of the key points. Here we go. So this is the big one right here. It says policy expectations, however measured, point to a first rate cut at the September FOMC meeting and at least one more cut later in the year and further policy easing next year. So this is something that the markets have been waiting on for quite some time. We know that we've been on the fastest rate hike cycle in the history of the US economy. And now the Fed is acknowledging in their minutes that they are going to cut in September, barring some craziness. And if you go and read through the minutes, you'll see that it was discussed for them to actually cut in July. Remember, I was on record saying, oh, yeah, they're going to cut in July. They didn't do that, but it is happening now in September. And if you remember back a few weeks ago, we had really was a flash crash off of the unwinding of the Japan yen carry trade and also some weak employment data, a weak unemployment number. And so the Fed is seeing the risks that are showing up as a result of weakness in jobs employment data that they know that they need to react accordingly and do that sooner rather than later so that they don't risk recession, which that still could happen. But this is going to ease a lot of the pressure off of the consumer. You're going to see the housing market pick back up as mortgage rates start to come down. Credit card interest rates will come down, and small cap businesses who typically carry a lot of debt, you'll see their earnings now reflect higher profits and revenue because not as much money is going out to pay for debt. So that's just some of the benefits that are going to come from these rate cuts. And then the next question is, being that the Fed was potentially going to cut a quarter point in July, does it now put on the table for September that they do a 50 basis points cut? So that's what we'll have to see. But again, the market, we'll take a look at how the market responded to this. But again, you can go read through these minutes here. I'll go ahead and post these in the chat for everyone if you want to check it out, or you could just do a quick Google and find it. Yeah. So that's what the Fed had to say. Now let's take a look at the markets and how they are responding here. And let's go over to SPY, share my screen here, share, and just come over here to 3 minute. It's actually been kind of a bumpy, choppy day. And you could see that initially there was a little bit of a push that came through in the broader markets from the FOMC minutes. You can see this push. It got the 56.27, and then it sold back down, pushed back up, and now it's coming back down again. So kind of a choppy bit of a day. And if you just go back to the morning, you can see up, down, up, down, up, down. So choppiness really, not any sustained moves. If you go to the Qs, We just take a look, similar thing, up, down, up, down, up, down, up, down. Sounds like my coach at football practice back in the day, right? How fitting the time of year. But really, again, just choppy. And keep in mind, if I come over here to the economic calendar, that on Friday, Jerome Powell is going to speak at 10 a.m. And that could be a pretty significant moment for the markets to push us higher or push us lower. So it makes sense that there's going to be a little bit of choppiness, a little bit of a choppy reaction to these minutes because we still have that piece of information to come in through Powell's speech on Thursday or Friday. And then tomorrow, let's just check the economic calendar to see here. So we do have jobless claims. So the market makers are going to be paying attention to that to just make sure that they're not too high, because if they are, that's going to be an indicator of a risk of recession. We're also going to get PMI data, which will tell us about whether or not the economy is contracting or expanding. So this data tomorrow will move the markets, and then again the Powell speech on Friday. So still a lot of volatility left this week. And so if we just go over to the IWM, kind of the same thing, pushed up here to 215.55, and now it's coming back down. Again, just kind of choppy all day. You did have this push here till later in the day. TLT, which is your treasury bonds, had a little bit of a push. Now it's selling off. So everything is kind of selling off here. The VIX, this is our volatility index. It's coming down a bit. And then we take a look at our 10-year treasury yields. Typically, when we see this move lower, this means that stocks are going to push higher. And we did see this drop a little bit, but now we're getting a little bit of a bounce. And, just taking a look at some of the bigger names here, you're going to see a similar pattern across the board here. So NVIDIA, pop, drop, right? If we take a look at Amazon, same kind of pattern, pop, drop. I wouldn't even call that a pop, just kind of a tiny push. So yeah, not much doing here this afternoon after that push. Now Meta was one that earlier today had a nice big strong move higher up to 539, but then that sold off, and then it's pushed the second half of the day, didn't quite reclaim that high, got up to 537, and then came back down just like everything else is doing right now. Take a look at Tesla. We could see here again just the same kind of pattern here. So kind of tough market to trade today. It's just sideways action. So, and I wouldn't necessarily take any trades right now because this thing could whipsaw. If you want to, let's say that you get in on a short with as up and down as this has been, this thing could rocket higher, and then you're trapped in a short position. I did want to take a look at Bitcoin, because this is getting a sustained push, and this thing has been beat down for quite a bit. It is below the majority of its moving averages, but you can see it's climbing and it's getting a push. And if we go to this on the daily, we could see that it finally got above its 200 EMA here today. It struggled to do that. It's been below all of them for a while. It got above its 20, and now it's coming up on that 50 SMA on the daily, which is probably where it's going to get rejected. But this is a strong candle on Bitcoin. This thing has been beat up. So this is a really important time for Bitcoin, if it's going to push through these moving averages or if it's going to get rejected and it comes back down. So keep an eye on this one. I know this is one I'll be watching here for the remainder of the day. And I'll just stop there. If you guys have tickers, charts you'd like me to look at, let's go ahead and throw those in the chat. I'm just going to come back through here and look at the SPY and Qs, what's happening here. Again, we're getting some profit taking coming in right now. We got the 100 holding up the SPY. Still up 14 points. Qs. We got the 200 holding that up. If we look at this on the daily, Just pull up the daily here. You know, after that drop correction, this was the panic mode for a lot of people. These 3 candles down. You know, this thing has just been pushing higher. So we had a little bit of selling yesterday, not much. So maybe we get some sideways movement. But things look bullish. But you know, typically September is not a good month for the market. So we may see another bit of a pullback, you know, as everybody's getting very bullish on these Fed minutes. And the other thing to keep in mind, excuse me, is typically when the Fed actually cuts rates, that does have a negative impact on the market. So we could see a decline in stocks whenever that actual rate cut happens. And I believe that meeting when the rate cut will be announced, that will be the 18th of September. So it'll be good for everybody's wallets, the consumers' wallets, but it may at that point not be good for stocks. So we'll keep an eye on that. Taking a look at IWM back up to 215. So just really some sideways movement here. And we did fill that gap from where we started crushing lower on the bad jobs data. Now this thing has a ways to go to get back up to its recent high of 228. So it is moving sideways. But yeah, questions that you guys have for me to answer for you. I'll pause here. Okay. Well, I'm going to take a look at one more chart and then we'll close up because I don't want to keep everybody hanging on here. We're going to get back into a routine of doing these weekly, but just wanted to take a look at Netflix because yesterday, look at this, it hit its all-time high, broke its all-time high, and notice that it got immediately rejected. We come over here to see the last time it made an all-time high. It had, let's see if it had a similar candle. It did. It had a similar candle. And then what came from there? The bear market of 2022. I don't think that's going to happen. We'll have to wait and see. But this was really fun yesterday watching a stock that I do like to trade. Netflix hit an all-time high. And you can see it got up to 711.38. Wow, that's a heck of a move. Hopefully some of you were able to catch that. But notice right now, if this, more than likely, this is how this is going to close. We got an inside candle, so that could make for a big move, you know, the next couple of days. But let's just go to the 3-minute and look at how this played out here yesterday. And we could see, I mean, right out the gate, there was this thing just came out like a bull in the china shop and just bang, ran. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 out of 13 candles were bull candles. And then at 10:09 a.m., history was made on Netflix, August 20th, where it hit that all-time high. And now it's coming down. And who knows? Maybe it's just going to drop from there. It'll be interesting to watch. But that's a lot of fun. I really enjoy watching when stocks hit all-time highs. I guess that's the stock nerd in me. But that was fun to watch yesterday. So all right, if I don't have any questions here, I'm going to hop off, maybe do a couple scalps, and I'm going to get after some things I have to do around the house. But it was great being back with everybody here. We'll be back again next week for another round of Ask a Trader. And if you have any questions, please, this video will be posted on my YouTube channel. Put them in the comments. Email me at couragepaysbetter@gmail.com. I have a brand new beginners boot camp coming up September 10th. It's 2 times. It's noon to 2 p.m. Eastern and then 7:30 to 9:30 p.m. Eastern. So whatever works best for your schedule, or if you have somebody who wants to get into trading, share this with them, tell them to come check it out. I'd be happy to work with them and teach them the ropes of trading and investing. And with that, that is Ask a Trader for today. What is today? August 21st. I will see you next week. Take care, everybody.